What's going on, people? How are we doing? How are we doing on this fine day? Hope everyone is good. What's going on, Kevin? Hope you're well. Can I mod for your stream, please? This is a possibility, yes. We are definitely going to need some mods in chat, so shout. A few seconds and I will do that for you. Let's see. What do we mod? It's a good question. I can't actually remember how to do it. Let's see. Any other people that stream, little tip for you. If you want to double check your own sound, upload your own stream, well not upload your own stream, but play your own stream on like your mobile or something like that. Hear it perfectly well on your phone, then good. Sometimes it can be hard to tell. Don't know how to mod you, Kevin. Sorry. The only option I have is remove. Oh, probably help if I wasn't on Streamlabs. I was actually on YouTube, right? Okay, let's see. We'll start in a second, guys. I'm just trying to mod Kevin here in. There we go. Add as moderator. Right. Yes. Okay. There you go, Kevin. I gave you managing mod position. You've been commenting and liking our videos and stuff for long enough that I'd like to think I can trust you. Welcome to the moderator crew. If there is anyone else that's a moderator in here as well, obviously do say hi to Kevin. Okay, so let's just do a quick recap of what we were looking at yesterday, what we gave out yesterday, and how we sort of wanted the market to play out. Now, it was a pretty simple idea that we had yesterday. We had the idea that price action was going to go bearish after it created the bearish gap. The bearish gap was created. We said price action, we want it to go down. So all we did was established a higher time frame target, which was the daily low, and the closer target, if you were, which is a high hourly low, I believe. We came down to the 4 hour, and we simply established points of liquidity within here, and then we came down to the hourly and the 15-minute and established points of liquidity within there as well. Now rewind to where we were yesterday, and we were actually looking at this area. This is Thursday, 1 o'clock. It's around the time we were streaming. We were actually looking at this point, and we were looking at this, and then the higher time frame low being our main target. So we had a point to enter, to sell from, and then we had our targets to aim for. You can see that price actually came in during a fundamental move, a high impact news, brought news up into this liquid area, and then we sold off beautifully. So it was literally a perfect move that we called. We actually now to reevaluate because we have slightly different criteria now. So we have targets to aim for. Well, this would be our short-term target, the closest target to us, which is the 4 hour low, which hasn't actually established itself as a low yet. We still need to wait for the next candle to close. But we have 4 hour high, another 4 hour high right here. But our bias is still bearish. So we're looking at areas at the top to then sell lower into the lows, right? Looking for this, and then the higher time frame target to be hit. Now, of course, we have to be aware of fundamentals. We have to make sure that we're following what price action is telling us, and we want to trade within the parameters of institutional involvement. So we need to wait for those signals to be given. Now, you can see we have this area right here. This is not a 4-hour point of reference. This is a 1-hour point of reference. You can see that right here. The high responsible for taking out the previous candle high, therefore it holds high liquidity. So on the hourly, this is an area that we could begin to look at, which is where we are right now. So we can go down to the lower time frame and take a look here. So we're on the 5-minute. We've got the 15-minute as well. It's also a 15-minute high. Have this high right here, as well as some short-term highs within here that you could see being taken out. But the main points we're looking at is here, 4-hour, here, which is your hourly and your 15-minute, and then the high right up here. Again, these are points of reference for us to look for sells from, not points to target. Remembering that anything in this direction is counter our bias, so it's something that we don't want to be trying to buy into. We want to try and sell into these moves to then capture the moves that ultimately come after that. What's going on, brother? Hope you're well. Good afternoon to you as well, my friend. Hope you're good. So we're looking right now at Euro. We've just tapped into this area here, which has now been taken out. You can see that our previous targets yesterday, we actually hit all of them except for the extreme. So you could have sold into any of those targets and it would have been beautiful. Now, the only thing with it is if you look on the 15-minute, so if you're trading just off the 15-minute basis, your entry here, so just off the 15-minute, we swept out there. That was the previous liquid that was swept out. It comes down, doesn't give a space until this point. So you would have been looking to sell from this sort of region down, which doesn't really give you much at all. Okay, now we said this before, you can trade using the 1, the 5-minute, whatever you like. The 1-minute is going to be less probable for overall movements, but it's going to give you more than likely an entry. So within here, excuse me, if you'd have taken your short position after this gap was opened, so we take the high, then we open this gap, you could have entered at this candle right here to sell lower, but you wouldn't have hit your short-term target, which is unfortunate. You'd have held full risk on this position, you would have come to a break even, or you would have taken a loss, which again is proof that the 1-minute is always going to be less probable. The 5-minute is also giving us a similar thing. After this sweep, we come down, we don't create any gaps on that downwards move. The only gap we create is here, which isn't going to be valid for us to sell from, as we need the gap to be created after this move here. Now, let's say for whatever reason you have this scenario happen multiple times, so we don't see a gap open up on this downwards move that initially takes the liquidity, and we see a gap open up later on, you would always refer back to this high as your stop loss. So in this case, your entry would be around here and your stop would be here, giving you a really low risk reward. So it's not ideal in terms of trading off of that. Now, doesn't mean it's going to be like this every time. If we go over to gold, show you the same principle. We also, if you didn't watch yesterday's live stream, guys, go back and check it out, because we gave targets for, I think it was like every pair we looked at, except for a couple, we gave targets for. Gold being one of the ones we gave targets for, right? We gave the target for this high on the 4-hour, this high on the hourly, I believe it was. And we said that we wanted to buy from either here or this low down here. We explained why we wanted price action to come down here, and it actually played out so perfectly. So back down onto the 15-minute. Remember how I was saying that this low was never taken? So the low that we have here, price action came down and just gave it a little tiny nudge, but didn't quite tap it. So I said that many people are going to be longing this, and ultimately I believe we're going to sweep this liquidity out, and then we're going to run for the high and the high, and the higher time frame high, which is right out of the picture at the moment. Price action did exactly what we wanted it to do, and I've said this as well. You're going to see the same thing happening on the lower time frame. So for example, sweep the low here, run higher. Sweep these lows, run higher. You're going to see the same thing happening. But if you want to capture a longer term move, then you need to obviously establish a higher time frame principle. So taking this move, after this sweep, again, fundamental sweeps aren't the best ones to trade. Come down to the 5 minute, we actually have a push right here. Beautiful. We don't surpass the previous high. We create a space here. Gives a beautiful area to use structural low as your stop, entry, and then you begin to target your high and your high. Now, I don't know what the RR is on that. I don't want to... I've said this before. Anything I show you in hindsight is purely for the principle of what we want to be looking for in live price. It's not for me to say, look how amazing this is. You know, you're missing out sort of thing. This is not what I'm showing you. I'm showing you what we need to be looking for in the core principles here. So 3.2 is the first target, and the second target is up here at a 4.1 or 4.2, give or take. Call it 4.1 after commissions, it can spread, etc. So not too sad at all. The only problem is this didn't actually occur till I was already in London at this point. Pretty sure I was eating dinner at this point. But yeah, exactly the same concept, exactly the same. NAS 100, we gave the same principle out for this. The only difference with NAS 100 is it didn't actually give us an entry. So rewind to yesterday, we were like here, I believe, Thursday. Yeah, let's see, Thursday. Yeah, so we got off the live stream at about 12:30, I believe. So out here, back down to the 15 minute. Yeah, so we got off just before we took this high. So if we rewind just to back where we were, again, you can go and validate this by rewatching yesterday's live stream. This is what we were looking at. So we're looking for price action to run an area that is going to give us a nice move higher. And then we had targets here and here. So short term, mid, and then longer term target way up at this high. We're ultimately looking for something like this. Yeah, of course, that's a very exaggerated version of what we see. Skip forward to where we are now. Notice how we did come down. Right? Did come down, but we didn't come down far enough. Also, notice what happened here. We came up, took out the highs. What happened to the low that took out those highs? So if we, again, rewind back to the same principle, let's say by some amazing feat, we don't have to ever leave the charts. We can just sit on the chart 24 hours a day, right? What would have been our next step from here? What would have been our next step? So what do we do every single time? We go to the daily. We know the daily's bullish. We go to the 4 hour. Okay, 4 hour, we would have marked this high and said that this is not a confirmed high, but it's going to be a short-term liquid target. Hourly, great. Can we confirm that high? Yes, we can. Right, so that's our target for the hourly. Where are we going to begin to look for possible entries? Low here. Look at this as entry zone. Okay, remembering that these are still valid, but it's like the probability is the further away you get, the less likely you are to hit these. And we'll leave this here. Okay, so we're looking for the same thing now. We're looking for price action to come down into one of these areas and then run high, right? Exactly what I've shown you in every single live stream. Go back and check it out. Go back to the 15 minute, look at some real short-term targets. This low doesn't hold any value for us. This is the hourly low. We've got this high, this one, so we've got short here. Target, so we've got 2 entry points, 2 points to target. We know this hits because we've just looked at it. Let's go to the 5 minute and see if there's an entry that can be taken with it. Okay, so no space right there. Space, no space. There's your gap. So you'd be looking for an entry. Excuse me. You'd be looking for an entry around this area. Pretty ambitious to get price to pull back to here. Again, this is not me hindsighting you something and being like, look how amazing this is. This is me showing you a concept that holds fluidity when it comes to live price action. So I'm not showing you this to be like, oh, look at the trade you missed. Look at what I'm showing you, and then this is what you need to replicate in live price action. And if we get something in the live stream, I will show you it. But as I've shown you many, many times, these don't just pop up. You know, they're not scalping. This is institutional movements. Institutes don't just buy and sell every 5 minutes. They're doing it on a daily basis or a weekly basis. So just follow the principle here. I don't believe we're going to get a tap back in. We actually do. That's insane. Hold it, hold it, hold it, hold it, hold it. We get tapped out. No, we don't. Well, not yet, anyway. Is that where we're at right now? Okay. First target hit. Beautiful. So I didn't even think that was going to tap in, to be honest with you guys. I did not think that was going to tap in. But notice how it's the same principle I showed you. You wait for that gap. Find the area responsible for that. Use your structural point as relevance. Now you could, of course, add more risk to it and use the actual low of that area. You can. But you will see these areas get taken out sometimes. So it's always worth using a structural point to give yourself a little bit more protection. And as well, generally, 90% of the time, this structural point is the lowest point from the previous area you were looking to be liquidated. So it tells you that if you are going higher, institutional orders sit here, meaning that your stop loss should be safe in that area if the trade is going to go in your favor. Now, within here, we're just looking for these highs to be taken out, and we're looking for price action to run higher, right? Go to the hourly. Well, you know what? Let's just completely skip ahead to where we are. And price action now has run to the previous target, excuse me, and we're looking for it to go high. So that's a great example, again, of what I was showing you. The same principle. We're going to delete that because we don't want to people think that we're hindsighting it. The hindsight principle is only there to showcase actions that should be taken if something presents itself on a live price chart. Right. Let's go over to Euro here. Let's go Euro 5 minute. Okay, if we keep this gap open here, then there is going to be a sell opportunity from here, like so. If that gap stays open, if it stays open. So we've got another like 3 minutes left. So until that gap is actually open, we're just going to let it do its thing. I'll be right back with you guys. I'm just going to grab a drink and go to the toilet. Be right back. Right, what's going on, guys? I'm back. So we've got 1 second. Cool. Trade valid. Trade valid right there. Have to pull back if you want to pull back. Target low. 4R straight off the bat. That's pretty good. Pretty good. Okay, let's see. See if we can get a nice move on this. Fine, what's going on, bro? Good. How are we doing? Let's go back over to 100 and gold, and we'll take a look at what that's here. So straight to the hourly, and the same principle applies. So we had a previous, really get rid of that on this time frame. Ability hours, we can get rid of that. So right here we had this hourly point that was taken out. Got this high, which is our target. We've got 4 hour quickly. Hourly. Got a lot of lows in here. A lot of lows. 50. This at the moment. Points of liquid to look for entries. Too much going on with that. 5-minute FG. So euro was, it was a entry here, so we swept the previous high. Excuse me. Bias is short. We opened up previous gap here to the upside. After the sweep, we've opened a gap to the downside. So I was actually waiting for a tap into here, but it hasn't actually come. And then sell through to the low. The same as what we was looking at yesterday it was for euro as well, which is where we took out this high. We called as one of our targets, and then we hit the low, the low, and the low, which again were our targets. We are predominantly short now on euro and EU. Gold, I believe, was still long, but the crazy thing was our bias changed to short on, I think it was Tuesday. I think our bias changed to short on Tuesday, and when we go over to the sentiment, we're actually 81% long. Retail is 81% long on euro. So yeah, I mean, take it for what you will, but at the moment, I think there's a lot of stop losses underneath these lows right now trying to go long on this. See, we had a pretty nice setup on gold as well. It was pretty much the same thing. So yesterday we called long on gold. 1 minute. Called long on gold, and we said we wanted to see this low taken out. And we want to target here, and this high. I don't know why that's and price literally came down, swept it, gave a beautiful area on the 5 minute, tapped in and then ran to target 1 and 2. Haven't hit the highest target, but like I said before, you don't have to hit those points every single time. That's more of a long-term target. So at the moment, go to the hourly or the 4-hour. On gold, we have liquid taken. Have this low. Honestly, not the best. We kind of spread it out a little bit here. These 2 points to look at if we decide to go long. We'd look to go long from here or long from here. Again, very, very vast different areas here. So keeping in mind that there is potential for it to continue going lower. We do have fundamentals in like 30 minutes time. So that at the forefront of our mind. Same thing goes for Euro. So Euro still continuing to sell a little bit here, but honestly pretty choppy, not really going anywhere. How long until news? I generally have a 15-minute buffer on news. So 28 minutes away from high impact news. So I'd probably exercise caution on this, to be honest with you. It's 1 p.m. now, so we're in that lull between UK lunchtime and New York Open. Really going anywhere yet, but like I always say, right, let's just say this price just goes straight through like that, you take a loss. That's completely fine because it's part of the statistical approach to trading. There's always going to be losing trades. Something that a lot of people just can't handle is the fact that you take a loss. Well, what business have you ever been in where everything is a win? You haven't. There isn't one. So higher time frame biases as well, not biases, sorry, but higher time frame areas that we're looking at here and here on the 4-hour. Again, get up to these points, potential to sell lower, targeting here and here, the 4-hour basis, so it would be down to the lows. I've done a sound effect there, down to the lows. Hourly, it would be the same principle. Look, this potentially could become an area, but we have the same high and the same high. Okay, so if the hourly decides to push up, we can sell again down into the lows. 15-minute, you can see the same thing, except there's drawings everywhere. Same thing happening here, here. Okay, same thing. Now go back to the 5-minute. Look at the way that we've condensed the same principle, but to a short-term high and a short-term target low. Now in this case, we haven't actually been tapped into this. That's fine. Price action doesn't always have to tap us in. There's going to be something else that, as a trader, you have to get used to, which is seeing price action do that. So absolutely start to tank, and you be happy with the fact that you were correct and just accept the fact that you're not in the trade. It's not the end of the world. There'll be another setup. There will be another setup. Do not cry about it. So again, what is this based off of here? Well, if you look at it, this was the closest area on the hourly. We had this high, and we will have this high if it decides to push down. But price came up, took the first high, and then gave an entry. So we can say, okay, we'll short from here, aiming for the nearest target low. Go back to the 15-minute and the 5-minute. Notice how you could begin to say TP1 would be here at 1 to 2, TP2 would be here, TP3 would be here. You can condense it down into a smaller position. Okay, so just for reference, for anyone that's watching, if you have got your order set here or you didn't get triggered into this, I'm going to be cancelling my order out now. The reason for that is because we're running, overall, if we got tapped in, you're running at a 1 to 2.3. So you'd be looking now to start to reduce your risk on this position if you were in it. Of course, you can do your own thing and leave it and just say, well, if it comes back, I'm going to sell. That's fine. But the principle is, if we get this far, are we going to come back up and reject again? Possibly, but the probability of that becomes less. We're not making any gaps in here, so we could completely mitigate this whole area. Or we could just completely run lower through these lows, which is great. But let's just put an alert here, and that would be my BE. Okay, so if that alert goes off, we'd be out at a BE, which is fine. We're sitting right on top of red folder news. We're 20 minutes away, so we're not really that far away, pretty close to the news buffer of 15 minutes. The potential still stands. What you might see during news is price might just absolutely dump, or it might pump, or it might do the opposite. It might wick low, run high, or it might wick high, run low. You just want to keep out the way of fundamentals. Fundamentals will fuck you up. To be blunt, that's what they will do. Okay, just to clarify, I'm not in this trade. We didn't get triggered in when we wanted to be triggered in. Of course, there is potential for it to run back and tap in and run. That's great. There is potential for it to completely blast through and fail. There's always that potential with any trading system. Nothing is 100% hit rate. Okay, so let's just go take a look at some other trades here. Gold actually tanking off quite heavily now. So let's go back to the hourly. So remember what we said here. Hourly and 4 hour actually hold the same points, pretty similar to what we was looking at in Euro. If we hit this low, we can start to look for longs up to the high. If we hit this low, we can start to look for longs back up to the high. Of course, coming down into this low, we'll probably establish some short-term target points within there, as well as the principle here. If we take this, we'll have a short-term target here, short-term target here, and we could trade up to this. Then price may want to continue down. The short-term targets are going to give you opportunities to get in and out without having to hold for those longer-term targets that may actually never get met. Instead of trying to compromise your account by holding something long-term, just get the short move in and out and be done with it. Yes, you may want to take it to wherever, but it is. So let's go NAS 100. No, nothing really. So we just go back to the Euro and see what Euro's doing. Looks like it's right up near the PE level. It's actually still lingering around in the same spot. Again, you can go down to the 1 minute and use the 1 minute as well. And like I said before, you could of course look for your entry on the 1 minute based off of this being liquidated, which would have given you the gap here and an entry of here. So it actually would have been a more refined entry. But like I've shown you in many other examples, the 1 minute is going to also have the opposite. It's higher reward, of course. So it would be like so. It's higher reward, yes, but it's also higher risk. So it gives you 6R rather than a 3.9. So it's definitely a higher reward, but it's a higher risk. And most people are not going to be able to stomach the principle of losing, let's say 4 or 5 trades in a row, because statistically, with I think it's I can't remember the exact number, but depending on what your hit rate is, depends on how many consecutive losses or wins you can take. So the higher your RR, generally the lower your hit rate. That's just the standard of mathematics, like the way maths work. It's the standard of it. So again, great principle here. I'm showing you this live. This was a completely live example and it could have just blasted through. We know this. But in this case, it didn't tap in. It's unfortunate. Price is beginning to run lower now. Great. Fortunately, we weren't able to capitalize on this. That's fine. That would be TP1 there. Again, what you do at TP1 is completely up to you. You could take X amount of your trade. You could, let's say, secure your position with 1R of profit. Similar thing to taking partials. You're just not reducing your position. You're just reducing the probability of higher targets being met. The reason I say that is the second you move your stop below the point it was previously, you're reducing the probability of price continuing without hitting it. This is a pretty clean example, even on top of news. The sweep was given, the area was introduced, we set the order. In this case, we didn't get triggered in. Price runs. We're about to hit the first relatively high liquid point within the short term. Longer term, which is our main target. And like I said before, right? Scale this out. Scale this whole setup, scale it out, right? Put it into the principle of, I'm not interested in taking partials here or here. I'm just going to get in and I'm just going to hold it. Okay? Look at where our higher time frame targets are. One is here and one is here. That's a 9R and a 7R. Again, I'm not telling you to do that. I'm just saying the probability is on a higher time frame that you are going to see these areas ran. Not every time, but that is the case, right? So same example here. I know there wasn't actually an entry given, but say, for example, the same entry was given around this point, okay? First target was here, so that's a 2R. Second target was here, that's a 4.6. Third target was there, 5. And then we had a final target down below, 11. In this case, it didn't. It came back. It would have triggered you out probably at partials or whatever. But the same principle applies. Use the short term to get your bulk of your order in and out. And then use your longer term for holding a position if you want to hold a position. You don't have to hold the position. You know, there's no position holding necessary. You could literally just get in and out here at 1 to 1.8. Get in and out, boom, done. So it's a shame we didn't get triggered into that. You guys watch me explain it live, mark it up, show you the entry, and price is running in a very impulsive manner. Maybe it's just complete fluke. Gold, we're actually looking for the opposite here. We're looking for lows to be ran to then follow it long. So it actually is a reverse of what we're looking at on EU. Why it took me so long to get that out. So same thing occurs here. We're looking for long moves up, right? But if we can get a shift down, then we'll try and trade it up to those highs. And we actually showed you a pretty clean entry on this earlier using the same principle. I'll actually go back and show everyone that wasn't here earlier the same thing. So yesterday in the live stream, we were on about, well, we got off at about 12. We got off around here. Okay, bias is long on the higher time frame. We know this. So what we're looking at, we're looking at this high, and this high. We have a longer term high way up the top that we're targeting. We have this low, and this low as areas to look at for going long. Points for liquid to be swept from. Transfer of liquidity. So we hit our first target, okay? So this is, at the moment, it's running in our direction. It's just not hitting the points we want it to hit. Okay, price pushes up, takes out our liquid highs, okay? So what do we have? Well, we have a low here on the hourly. We have a low here. Go down to the 15-minute. What do we have? You can see the low here. We have this. We also have here. Okay, so at the moment, we only have one. We have one liquid target here, and we have one low, two lows. So we're looking for the same thing. We're looking for a run of these to then run to the highs. And okay, we put in another high. Great. So we've got another target here. So we've got short-term target, mid-term if you were, and then the higher time frame target up top. Look at what we've just done. We've just swept out a low we highlighted prior, exactly like we did on Euro. Come down to the 5-minute. Price opens up a lovely gap for us. We set our entry here, stop loss below the structure low. Price comes down, taps into there really beautifully once, twice, and then runs off to the targets. We didn't trade this. We're not marking it up and saying that we did. Exactly the same with the Euro trade. We were looking to go in. We didn't go in because it didn't trigger. But it's the same principle. It's exactly the same thing. Find your bias. We've told you how to find your bias. Find your points of relevance. We've told you how to do that as well. And then just let it do its thing. Just sit back and let it do its thing. So remember, if you aren't already a sub to this channel, then hit that sub button. If you do enjoy the content, then of course a like goes a million miles, a little share, all of that stuff. We really appreciate it. It really does go a million miles. And of course all this content is free. So a little click on the mouse is a very small amount to ask. We have 13 minutes before news now, so I'm not interested in trading anything right now. I'm just going to set some alerts and see what price action does. What's everyone thinking for the fundamentals here? We've got the NFP, the NFPP, if you were, pay the non-farm payrolls private, non-farm payrolls public, and then we have the unemployment rate U6 and standard unemployment. Everyone's views on what is going to happen here. Such a shame it didn't trigger. Honestly though, I would be rather inclined to move my stop lower because you don't want to be holding a break-even stop when news comes. If news decides to blast high, you will take slippage and a major loss on that. One thing that you really have to be careful of. Take the position out generally is the best option. But that's actually running so beautifully. And if anyone did just take it immediately after that gap was formed and took a less RR return on that, great job. Not condoning that. I do recommend following the pullback principle. So the fact that people are actually trading the NFP is wild to me. The fact that people are actually trading it is crazy. Like if you're a fundamental trader, I get it. But the fact that some technical traders are trading it based off of technical analysis is pretty insane. Well, it's not even insane. I think it's just stupid, to be honest. That's just my opinion. Okay, so some of you may have noticed that we have a sponsor for the stream, and NSAB Investments. They are my partners. I work closely with them. They're a great company. Now, the fact that the stream is sponsored, they're not paying me anything. They're not paying me. It's a partnership sponsor. It's a mutual thing. So don't think that I'm sponsored. I'm being paid, loads of money to promote them. That's not the case. If you are looking to make profits completely hands-free, then just go and check them out and just quote my name when you book a call with them. Of course, you can book a call with me if you prefer. So just go over and check them out if you want to. Same with the Discord. If you're not a part of the Discord community already, then highly recommend following the link and go in and checking out the Discord community. I'm actually going to be going live in the Discord community in about 25 to 30 minutes after the news, breaking down the potential for the rest of the day and what we're expecting and so on. Because yesterday after news, there was actually some great entries given. So let's see if we can capitalize on some of those today. Let's go and look at GU, because GU is an interesting one. GU shifted bearish. We have bearish targets for this. We're looking for this low, this low. This establishes a low here, which it could. Then we'll be looking for that low to be taken as well. It's establishing a really clean sell bias, but the principle is that we are running within a higher time frame bullish narrative. Now, we had this sell move come in, and we had 1, 2, possibly, depending on what the result of this NFP is, possibly 3 days of bearish price action, which is still enough for price action to want to reverse and go back into that higher time frame trend. So just because it's showing you something on the daily time frame doesn't mean it's going to run for that like months or weeks. It could just run for a few days and then go back to its old direction. Okay, so daily is pretty simple. We're looking for that bearish move. Let's get this off. So if you are watching the stream, don't hesitate to say hi. Happy to always converse with my viewers and ESS family. So 4 hour. 4 hour is going to be the first stop for us. 4 hour right here, you can see we have 2 highs here and here. These are going to be potential entry areas. Now, the reason why I say potential is because in a real world scenario, we're either going to go like this or like this in about 8 minutes time. So we don't want to just be like, yeah, we can get in here, because these could just become completely invalidated, or they may become ludicrously far away. So as it stands, we have these potential points of entry. Also, price just may not give us an entry there. That is probably the most important point. So points of entry, we're looking for price action to do something along the lines of this. Very simple. So let's go down to the hourly now. Okay, so a good point to make here is that the hourly actually holds the same points reference. That's great, so that doesn't really need to be adjusted. We can, of course, highlight this if we wanted to, and highlight that, but let's just generalize them, and one's this high and one's this high. Okay, so we don't need to be going too crazy. 15-minute time frame. We have a short-term target in here, which I wouldn't even consider, to be honest with you. This high, I wouldn't even be too bothered about taking that. But there's potential for that to give us a short-term reaction. I'll mark it up, but I'm not really interested in selling from there, to be honest. Back to the hourly, just see what we have here. So what we want to be looking at now is the 15-minute for targets down. So we have one here, one there, pretty obvious, and one here. So really close to each other, and then that leads us into the hourly. So the only reason you'd want to even consider these would be if you were trading off at this point. Go from here to here and here and here. All right, and then maybe you'd get down to the high time frame low. But as I said, I'm not really considering this point here. Me, not really the best. I'd rather see a higher point hit. And this is just basic principle, right? You want to sell at higher pricing and you want to buy at lower pricing. It's just basic understanding. We'll put it as entry zone, but again, not too bothered. These are the points. Super simple. Minimal chart work, maximum probability. Euro changing here. Now this is what I said earlier. This would be your first point of management within the trade, based off of the fact that this is a high value point within this push. Not creating any fair value gaps on the way down, telling us that momentum isn't necessarily there right now. Price pushing up super aggressively. We've got 4 minutes until NFP. Generally, just stay out of the market until this has passed. I just got to take a call, guys. I'll be right back with you. Okay, so we've got 4 minutes until NFP. Again, price action chopping around. I'm going to put this back to where the BE was. Again, I'm not actually in this position. I don't recommend anyone holding a position through news. It's generally just very high risk. When it comes to a trader, you've got to statistically make it work for you, not by wishing and so. Everything's sort of paused, ready for news. We've got 3 minutes left. Tell me where you think price is going. I could see this potentially pushing up through these highs here. See. And notice how I said, oh, I could see price pushing up through the highs. My bias is short. I'm perfectly happy to know that I might not be correct with my bias every time I'm trading. It's not something that not married to my direction, so it's got to go down, you know. Not how it works. Like if we go down, great, awesome. We're in a trade, great, that's awesome. If it goes up, then it goes up. Does that? Okay, so 2 minutes until news. Actually, 1 minute, sorry. See if I can get this on a little countdown on the screen for you guys. By the time it comes, it will be gone. Great. Awesome. Yeah. Out the way. Apologies, guys. There you go. So news is coming. We're 26 seconds away. On this, price action is going to go wild. Let's just watch Euro here. Again, if you are in a position, I recommend highly to get out, even if you're in a minor loss. And if it goes in your direction, it was nothing but luck. So please just keep that in mind. Be safe. News is coming in 5 seconds. Remember, our bias is short, but we do not care what way it goes. Look at that. That is a beautiful move. Beautiful move. Again, we could have said, oh, hold this position. Let it run. Let it do its thing. Be realistic, guys. Our bias was short. It went short. The entry was given. Amazing. That's great. Gold absolutely blasting through the lows now. That's fine. That's 100. We had high targets for this. Price action is going higher. Amazing. That's great. That's what we want to see. The same with GU. All targets hit. We're hitting targets and we're not catching entries. That's fine. Be happy with the fact your bias was correct. So overall, great result for the news there. Great result. Our bias was correct. Price action is running when we want it to run. We actually had a completely correct entry. We didn't technically hit our BE, but I believe with spreads you probably would have got taken out. Most likely. And it's always worth just not being in a position if news is coming. So that's been today's live stream, guys. I hope you've all really enjoyed it. We've shown you the same principles, same setups, same scenarios, same targets, same bias. Everything is the same. It's all uniform. If you have enjoyed this and you want to learn more, of course, join the community in the description down below. And I will see you all in Monday's live stream, actually Sunday's live stream, where we go through our outlook for the week on Euro and Gold. Enjoy the rest of your Friday, guys. Have a great weekend, and I will see you all then. Peace and love.